One. Hello, everybody. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. John is here with us, but he is here with us in audio spirit only. Let's get right to it. We're looking at supply. It came in at 72.83. Show me the chart.
Well, there you go, Noah. That is so supply is ticking down. Overall supply is down 2% from the week before, but as we're going to see in a few moments actually, weekly supply is up big. So let's cross that bridge when we get to it.
Yeah, I would think, John, that supply is in the process of stopping its move down, going to probably start stabilizing, and you're going to start to see this number go up over the weeks and months ahead. So if you're a buyer out there and you're wondering what's going on with inventory for the last couple of months, you're probably going to see that start to come around.
Yeah.
Let's move right on to the measure of demand. Pending sales came in at 3130, keeps going higher. Johnny, show me the chart.
Yeah, again, that's a 2% increase from the week before. And that's, what's interesting about this is we're running about 32% higher than where we were last year at this time. And that's very interesting for a number of points. Number one, this is sort of the overall measure, which is nice to see, but also on the weekly measure, which we're going to get to in a second, we're also running hot on that side too. So let's move on to weekly new actives.
Yeah, let's move right on to the weeklies. And here we are on the dashboard. We're looking at our market ticker. I'm looking at supply. The 1 week supply is ticking up, John. We came in at 277. That is definitely a move higher. Show me the chart.
Yeah, it's like a 260% move. I mean, we were at 77 last week, or 200 more this week. So it's a huge spike up, but it's not unexpected. I mean, listen, this is the first week of January. Sellers are back. This is the beginning of the listing season. I think we're going to see weekly new actives in the 200 to 300 range pretty much through March. I think we might have some big spikes over 400. I mean, it's to be expected. But, Noah, one of the things that we saw early 2020, we saw it with the reopening, and we saw it in December or even October, was look, first the listings comes on, it's going to take a month or so for the buyers to get out, and then they're going to take them off. And that's kind of what we're happening. So here we are, week one of the listings coming on.
Exactly. This is week one. This is like we're not even in the first inning. We're about to get up to bat for the first inning, and it's starting to happen. So when you see a number like this of 260%, just remember you're comparing that to the New Year's holiday season. And nobody's bringing listings.
And let me just mention one more thing, is that's actually 25% lower than sort of the figure we had last year at this time. So even though it sounds like a giant percentage increase on a weekly basis, year over year, we're down 25% in terms of new listings. So, we're off to a good start.
Good. And we'll keep an eye on it for you. Let's move to the measure of demand. 1 week contract signed. What did Manhattan do? 193. Johnny, we're below that 200 level. I like to stay above, but it's still strong. Show me the chart.
Yeah, no, we're barely below it. That's it. We're up a few percentage points from last week, but the more salient point is we're up over 50% from last year. So again, this sort of falls into that sort of dynamic we've been talking about, which we had that sort of giant momentum to close out 2020, and here we are in 2021, and we're still sort of running ahead of ourselves here on contract sign, which is a good thing. So hopefully we can keep this momentum as the new supply comes on, and hopefully this will be a much more balanced market. And sort of the farther we go with this, it sort of hammers in the head that maybe 2019 was the bottom after all.
Right. That's a really good point, John. Really good point. And, I just want to show everyone, go back to my ticker for 1 second. You could change this to 1 month, and it really does tell you a much better picture. And you can see right here, I mean, because the trends have changed. The market has shifted. The pulse has drastically moved, not in favor of sellers, but it's getting away from buyers. That buyer leverage has moved drastically the other way over the last 3 months. And if you look at it on a month-to-month basis, supply is down 33%. Contract signs up 16%, off market's up 22%, and market pulse is up 34%. And that's really your measure of which way the market's going. So this 1 month look, it's got some good data in it. It's a nice look.
It's nice. And I just want to point out, if you just look at that little, Tony, if you can go back, Noah, look at that little miniature graph. We have a little spark graph of the market pulse, and just look how just every day it's just tiny little increments, getting up there.
Yeah. Yeah. And it's really picking up that change in real time. So it's really interesting. Okay, so we're going to go on to the one unique chart of the day. We promised you guys this. We showed you guys listing discount at the time of the deal. We tried to explain to everyone that when you're looking at closed sales, there's a lag, right? Well, we want to try to bridge that gap between the lag. We want to get rid of that time lag. So we're going to show you sales data listing discount from original ask, right? Everyone wants to know total negotiability. So that's what this is, listing discount from original ask. But we're looking at the time of the deal. So if you signed a deal in April, that's what your listing discount was. In May, that's what your listing discount was. And John, when I look at a chart like this, because this is 2020 in total, all of the deals, it looks like we have two periods of volatility and I guess you could say fear and discounts. We got that period of April, May, and June, okay? And then we got that period of September, October, November, right? And I look in between those two periods, right? And those two periods looks like 8, 9%. And then you got right here, July and August is in the 6s and December is in the 6s. And all I could think about is that the fear levels during the shutdown were obviously higher. The reopen came, a bunch of inventory came on. So sellers were doing some quick deals and probably not lowering their prices. That powered that surge. And then after that initial wave, it looks like September, October, November. If you did not sell in the reopen, there you are lowering your price. And now you got to do a deal later on in the calendar year. And that's why your listing discount went up, except for December, of course.
Yeah, no, it's a great point. And it's, it sort of echoes what we talked about earlier, which is, first those listings come on and then the buyers come in and take them off. And so this is what we're seeing here. We're seeing when the listings come on, when there's a surge in inventory without the buyers, you have these big spikes in discounts. So that's where it is right now. So now we're at a point where we have that surge in listing volume, not really a surge, but we're having sort of a swell of the tide for listings to come on. But we also have, at the same time, we also have the buyers. So I would expect listing discount to remain in this sort of moderate level here going into the spring so far.
Yeah, in the 6s. And I would expect so as well. I mean, it's still too early because, I mean, if you think about it, if you signed a contract in December, how many of them have closed already? But I mean, that's why you're going to wait a little bit. So there's not a lot of data in here, but I would expect this listing discount to come down just a little bit. We'll see what happens.
But I mean, listen, at the end of the day, you got to be priced at the market to kind of, nail that discount percentage. If you're priced way over the market, you're going to come back to the market as it is. So
that's right. The market is what the market is, and the market does what the market wants to do when it wants to do it, and that's it. Well, John, thank you so much. That is John Welcome. I am Noah Rosenblatt. We are from UrbanDigs. This is your weekly Manhattan market report. Have a great weekend, and we'll catch you next week.